Polkadot is fighting a 3-trendline death cross around $2.30, the same price it launched at on Binance back in 2021. The most decentralized blockchain, according to ChainSpec data, with 178 Nakamoto Coefficient, is now trading at all-time lows while announcing its shift from protocol to product to people. I've been dollar cost averaging this position down from $4, and I'm not happy about it. But the charts are showing something critical that every DOT holder needs to see right now. The fundamentals say one thing, the technicals say another, and your capital is caught in the middle. Let me show you exactly what I'm seeing and what I'm doing about it. DOT is currently hovering around $2.30, sitting at support levels not seen since its exchange debut. Over the past month, we've watched Polkadot slide from the 360 resistance zone straight down to this critical 230 level, testing investor patience and conviction simultaneously. The ecosystem that was supposed to be the Ethereum killer, the chain that Gavin built after leaving Ethereum, is now ranked 37th in daily active users, with just 3.6 thousand daily participants. But here's where it gets interesting. While price action looks absolutely brutal, the fundamental developments coming out of Polkadot's camp tell a completely different story. Multiple major announcements dropped in November about product readiness, proof of personhood systems, and the unified parity portal going live. So we've got a massive disconnect between what's happening on-chain developmentally and what's happening with price discovery. This gap is either a generational buying opportunity or a warning sign, and the technicals will help us figure out which. On November 14th, Polkadot's official account shared 3 major takeaways from Dr. Gavin Wood's keynote address at Polkadot Sub-Zero. The core message: a decade of engineering is converging into a new era where core technology, identity solutions, and actual products finally meet real-world scale. They're calling it the shift from protocol to product to people. This isn't just marketing speak, they backed it up with concrete announcements. The Project Individuality Initiative represents a breakthrough for human-only systems. Polkadot is building proof of personhood that's private, decentralized, and grounded in cryptography and game theory. No surveillance, no KYC requirements, no biometric data collection. Their position is aggressive. Any project requiring ID documents is, quote, up to no good. This unlocks fair governance, fair airdrops, and products designed for real people, not bots. On the same day, they announced Parity is designing a unified Polkadot portal for mobile and web that will serve as the on-ramp for millions. The exact quote: "The infrastructure is ready. The products are emerging." Then, on November 21st, they doubled down on the proof of personhood narrative, explaining what game economies, Sybil-resistant social media, and honest government all have in common. They need to prove unique individuality without sacrificing privacy. They're building this directly on Polkadot through multiple DIMMs, proof of ink, proof of video interaction, and an AI-resistant system still in development. Their argument makes sense. Web3 can't work when one person can act like thousands, and KYC destroys the privacy that blockchain was built to protect. Now let's talk decentralization metrics. According to ChainSpec data from November 23rd, Polkadot ecosystem has the highest Nakamoto Coefficient across all blockchains at 178. That means you would need to compromise 178 validators to attack the network. For context, Avalanche sits at 29, Cardano at 22, Solana at 20. Polkadot has 600 validators and $1.9 billion in staked value. On the developer side, Token Terminal shows Polkadot maintaining 90 core developers consistently over the past year, ranking 5th among all blockchains behind only Ethereum, Hedera, Cardano, and Internet Computer. The staking market cap of $1.9 billion ranks 3rd globally, behind Ethereum and BNB Chain. So the fundamentals paint a picture of a highly decentralized, actively developed ecosystem making real moves toward product-market fit. But the market doesn't care, at least not yet.
Now, let's analyze what matters. Polkadot is fighting 3 descending trend lines simultaneously on the 2-week chart. The first orange-dashed trend line comes from the December 2024 local top at $11.60. DOT broke this trend line to the upside in August, but got immediately rejected at the 236 Fibonacci level around 450, forming a second descending trend line. Price is now retesting that first trend line as support, but lower, which is concerning. The third and most important trend line descends from the all-time high of $55 back in October 2021. We got rejected at this macro trend line in December 2024 around the 1160 level. Here's the reality.
For Polkadot to reach $8, it needs to break and hold above two separate trend lines. That's a massive technical ask for an asset sitting at all-time lows. My Fibonacci retracements are anchored from 1160 down to 230. The 236 Fibonacci sits at $4.50. That's my first meaningful resistance and take profit target. The 618 is at $8, which confluences with that third descending trend line. Volume profile shows point of control at 410, which could act like a magnet pulling price higher if we can establish support here. The Heikinashi RSI is entering oversold territory and pointing down. I've drawn two descending trend lines on the RSI itself that mirror what happened in October 2023. Back then, when RSI broke those downward trend lines to the upside, price rallied 200%. We're in a similar setup now, below the RSI trend line, coiling, waiting for a break. Compare the two white circles on my chart. The structure rhymes, but rhymes don't guarantee outcomes. For my position, I'm loading between $2 and $3. I started accumulating at $4, and I've been dollar cost averaging down, which honestly sucks. But this is where conviction meets capital. My stop loss for short-term trades is $1.90 on a weekly close. That's just below the 2021 Binance launch price of $2. If the weekly candle closed below $1.90, the structure is invalidated for me. That said, for long-term holders, I still believe this range represents solid accumulation for the next cycle. Now here's my trailing stop strategy. Once we hit 450, I move stops to entry. When 670 hits, stops move to 450. This protects capital while letting winners run. Take profit targets are 450, 670, 11, 17, and 26. I'm trimming hardest at the first three targets because that's where we face the most technical resistance. So, my game plan. Pay attention. Best case scenario, Polkadot holds 230, breaks the first trendline resistance, reclaims 450, and starts working toward that $8 Fibonacci level. That's a 240% move from current prices. The fundamentals around proof of personhood and product launches provide narrative fuel for that move. Worst case, we lose $2 on a weekly close, invalidate this entire structure, and discover there's another leg down. In that case, I'm out of my short-term position and reassessing whether this is a slow bleed or a basing process. Timeline matters. Short-term traders should be watching that 190 level religiously. Long-term holders can stomach more volatility if they believe in the 10-year vision Gavin Wood outlined. And what would change my thesis? Weekly close below 190 means I was wrong about support structure. Break and hold above 450 means we've reclaimed the narrative. Polkadot sits at the intersection of strong fundamentals and brutal technicals. The most decentralized chain by Nakamoto Coefficient fighting for survival at launch prices. The data says build. The chart says be careful. If this breakdown helped you see the setup clearer, smash that like button and subscribe for more no-nonsense daily crypto analysis. Hit the bell so you don't miss my next technical update. And join my free Telegram group for daily, faster updates. Link is in the pinned comment below. The next few weeks will define whether DOT becomes a generational buy or a cautionary tale. Let's watch it together. Thanks so much for sticking around until the end. Never financial advice, and I'll see you tomorrow.